Hey everyone, welcome back. Today we're going to take a look at Robinhood and see what kind of valuation we end up with. If you haven't been following Robinhood, they've had a kind of pretty interesting recent past. There are a few things I definitely want to hit on first from their recent earnings presentation, as it kind of should help baseline my thinking when we jump over into the actual model. So the first thing is, if we look at their net funded accounts, we can see strong growth historically actually that plateaued in Q2 of 2021, and they've basically stayed flat around 22.5, 23 million users since then. The next thing is the monthly active users. This is a bit more alarming of a trend. They went from growing to actually declining through Q1 of this year and are at a level below their lowest point at any point in 2021. But assets under custody have actually stayed unchanged, which I guess is a good sign, but it hasn't been growing either. The amount of equities looks like it has stalled, and actually they've basically had cryptocurrency that kind of took place of some of the equities that left. And hopefully as they launch some new crypto features, they will see more crypto on the platform. But quickly, the average revenue per user, it's down dramatically from highs, but this is very much in step with the monthly active users dropping. All of these metrics, when combined, we end up with a pretty large drop off in revenue as well. I think there's kind of a couple main drivers here. First, if we jump back to Q1 of 2021, that's when the retail revolution started to happen. And I even had friends who were never traded stocks before calling me, telling me to buy Dogecoin, GME, AMC, asking how to set up Robinhood accounts. So there was definitely some frenzy at that point. So for that brief moment in time, a lot of people got into trading, and Robinhood benefited from that. The second part that I think plays an impact on kind of all of this fall off is their decision to halt trading on meme stocks. Shortly after this happened, a lot of investors online discussed moving to other platforms. So this has definitely caused a bit of churn and exodus of accounts, especially those that were probably more active in the markets from a retail perspective. And Robinhood's entire business relies on people actively trading stocks. If you buy a stock and leave it in your brokerage with them for 10 years, they don't make money. You need to actively be trading for them to sell your order flow. So when the super active users leave, it hurts the business. So now let's move on from the top line and quickly look at operating expenses, and then we'll jump over into our DCF. There's a significant amount of stock-based compensation layered in, as footnoted, but even after removing the stock-based compensation, they've been averaging actually around $500 million of operating expenses per quarter since Q1 of 2021. If we compare that to their revenue, we can see they've never had a quarter over 500 million in revenue and are actually substantially below this. This poses a problem. If you can't get revenue back up quickly and above operating expenses, you're never going to be profitable. So let's jump over into the DCF and I'll walk through some of my assumptions and see how that translates into the valuation. First, let's start with the revenue assumptions. Robinhood reports revenue under three lines: transaction-based revenue, which is them selling order flows for equities and cryptocurrencies; net interest revenue, which is revenue primarily tied to margin lending; and then other revenue. So for starters, in 2022, I've assumed they have a turnaround when compared to Q1 of 2022. In Q1, net transaction revenue is down 50%. I have them finishing the year 25% down. Net interest revenue is a similar story, down 15% in Q1. I'll have them finishing about 6% down for the year, and then other being down 10%. This brings total revenue to a decline of 21% in 2022. This year is acting like a reset for them. We're taking the assumption that 2020 revenue was an anomaly from retail trading and COVID lockdowns. After 2022, we've layered in what I would consider strong growth for the next 5 years, then sort of plateauing out around high single digits. My thought here is they will launch some new products in the next few years that will attract customers and more revenue, but they already have a large portion of retail traders, and this is a very competitive space, so it is not only expensive but also hard to acquire new users. This is going to take revenues from 1.4 billion in 2022 to 3.6 billion in 2031, about tripling. And as a proxy, I looked at E-Trade revenue, which was last reported around 3 billion before being acquired by Morgan Stanley. I think this seems reasonable for a brokerage. Now comes the not so fun part: operating expenses. The guidance provided by Robinhood says the following: Previously, we shared that for fiscal year 2022, we expected total operating expenses, excluding share-based compensation, to increase 15 to 20% year over year, and share-based compensation to decline 35 to 40% year over year. As a result of our cost reduction initiatives, which include the reduction in force of approximately 9% of our full-time headcount, announced on April 26, 2022, and a reduction to headcount targets for the year, we now expect total operating expenses, excluding share-based compensation, for full year 2022 to increase by approximately 2 to 5% year over year, and share-based compensation to decline by approximately 42 to 47% year over year, in each case before giving effect to the restructuring impacts described below. So they're expecting in absolute dollars operating expenses to still grow 2 to 5%. I've layered in 3% growth in absolute dollars, then held the absolute dollar amount basically flat for the next decade. This takes SG&A from about 94% of revenue in 2022 down to 20% of revenue in 2031. R&D goes from 68% to 15% of revenue. Normally we see these two things being around the low teens for kind of a mature company as a percentage of revenue. If revenue doesn't keep pace with what I've laid out, which isn't even super crazy revenue assumptions, then more layoffs will have to happen as they will need to meaningfully cut costs sooner or later. I think this is the bigger piece here. They have an uncontrollable cost base and are growing and hiring as if growth in the first half of 2021 would last forever. They're bleeding cash and revenues need to quickly turn around to support their current cost base, or they need to do a lot more restructuring. With these assumptions, I actually get a valuation between 6.3 and 9.7 billion compared to their current market value of 8.2 billion. If they can actually stop the bleeding and turn the business around, I think it's a reasonable price. If they can surprise us all and get back a lot of the users they lost, along with finding more revenue streams, they could quickly supercharge revenue growth again, but until then, it looks like a company that is spending too much money to keep too few users that are trading too few times, and they're trying to turn things around. I think it's a very interesting company, and they've definitely created what I would argue is one of the most influential things ever for retail trading, and that's free trading. But as a business model, it looks like that alone isn't going to keep them in business. So they need to find additional revenue streams or cut costs and stop focusing on growth. I'd put a sale rating personally on Robinhood. There's a lot of risk to turning this business around, and the current model doesn't look to be a profitable one. Until they prove their ability to actually make money, I'd sit this one out. Anyways, that's all I had today on Robinhood. Leave any questions or comments below, and I will get back to you. As always, thanks so much for watching. Please like and subscribe. And if you didn't know, you can download my models below in the comments. Just go ahead and click on the link and then file download and make any adjustments to the assumptions I've made and see what kind of valuation you get for yourself. Thanks so much.